Good morning, it's Jonathan Barrett with the War Report. That's the Week Ahead Report, where we discuss the up-and-coming economic numbers due out of the global economy, or the major ones anyway. We also look to discuss some of the themes as well, which we've been following for some time, and to see whether or not our views have changed, or whether or not we're going to add to certain positions that we actually do hold in the market at the present. But anyway, let's kick off. I guess the most important thing is let's have a quick revision of what occurred last Friday, so we can certainly hit Monday being a little bit more informed as to what did occur. I guess the most important thing was, most important number was GDP out of the States. The market revised was up 2.8%, actually came up 3.1%, and purely based on the back of consumer spending, which caused that, which is actually very positive. I think, if anything, the market also reacted to that number in a positive light. Futures and the equity markets were all up. And I think this week, as we'll talk about later, we've got a lot to see in terms of consumer spending and also unemployment. So that could be quite interesting, particularly as we lead into Friday. Friday's the key for us. But before we do that, let's just have a quick look at just a bit of a summary. As you can see there, the Dow up 50 points, 12,220. The S&P was up 4, and the Nasdaq was up 6.64. Quite positive on that front. And you can see that number was quite good. Also, Egyptian stocks, as you can see, also rallied, which is a sign that I think things in the Middle East are slowly trying to settle themselves out. The Dow was up, as we mentioned. The top 50 was up 1. The FTSE was up 19. The CAC was up 3. The DAX was up 12. The market's a little bit tentative over what they're basically seeing in terms of sovereign debt concerns in Portugal. Our local market basically closed down 9 at 4,764. So equity markets, I think, are slightly mixed, but if anything, stronger in America than they are basically in Europe, and obviously that's for obvious reasons. Okay, let's have a quick look at just a few things here, just a few of the charts. As you can see, we've got that natural gas chart at the moment, which we're following. That's a leveraged one. But okay, let's have a quick look. As we always do, let's check the dollar out first, 76.38. You can see there's a bit of a bounce there. That's not too bad. That theme, I think, will stay with us. Keep an eye on a breakthrough 76.40, because that will keep that trade going a little bit better. I'm having a look at the Aussie. Aussie, as we know, and it keeps on going. We're long, but we took profits just before then, around that 101 area, so we've left quite a bit on the table. The fact that it didn't break through the downside here probably suggests that we've got a good chance that we'll continue to trade higher with. But this sort of formation, in my mind, it doesn't look as strong as it should be. So I'll just slightly be cautious there on that Aussie, particularly around that 102, 102.50 level. Let's see how it trades today. Dollar yen, very stable, 81.40, but dollar a little bit better bid. We are long dollars against the yen, as everyone knows. We've got in some very good levels there, and probably anticipate to add to positions on a break through this high here, which is through that 81, 82.10, 82.15. I think you can. It's a buy on break, buy on stop type of trade there, and you never know whether or not you get more intervention. But that's what we're looking for there in the dollar yen. Looking at crude, crude in itself, basically it's relatively steady at the top side. Now there's still a lot going on over in the Middle East, so don't discount what's happening there. I would anticipate, though, if we don't see more development in terms of contagion spreading, then the market, which put in this Middle Eastern premium, that will start to erode, and prices will come under a little bit of pressure. But it still remains a volatile thing, so I think, if in my mind, you either stay out of the market, or you would have long, or to be long at very good levels. Gold's been an interesting one. Gold has basically come back after those record highs, and that doesn't bode too well, in my mind, for the continuing trend to continue. I think there's a cheeky short in there if people want it. It's a cheeky short, but the stop must go in above that old high. It's a little bit higher from here. But in reality, when you look at it, it's traded up through 447, but then it's rejected. And then this then I think is creates. You can see that in this chart here. There we go. They're all the way up there, 447, and then it came back a long way. So I think the trend, although the upward trend is still with us, the medium-term trend probably suggests a turnaround. So let's just check. I mean, if you are going short, stop goes in above that area, 447, or right at the top there. So the market, as we know, is certainly still very long gold, And look, for all intents and purposes, this is just a dip, and I think that's the way the market has to view it. Okay, so that's gold, silver. There we are, looking better than gold, basically, holding up a lot better. Chances are that will continue to trade higher as well. Okay, now let's get into the numbers out this week, and there are quite a few important ones. As I mentioned, the big ticket items are towards the close of the week, and that's towards Friday. But on Monday, PCE and personal spending in the States, pretty important there. Pending home sales, we like. Also, a lot of persuasion there from what Fed Evans and Lockhart are doing. They're out there obviously priming the market as to what's going to happen. Also, Rosengreen is also speaking. In Japan, we've got retail sales and jobless rate are pretty steady there, as you can see. Now, Tuesday, a lot of stuff, more stuff in the UK there, as you can see, GDP and total business investment. The States, we've got the Case-Shiller home price, which is all important, and consumer confidence. Keep an eye on this consumer confidence, because with crude oil and what's happening in the Middle East, causing crude to trade higher, I think confidence will take a little bit of a dampener. So that might provide a little bit of a concern, I think, as we lead into the big ticket numbers towards the close of the week, which is the non-farm payrolls. In Japan, industrial production there, I probably expect a weaker number, and probably expect those numbers over there to remain relatively weak for some time. Remember, they are coming into the numbers for the reporting when the earthquake occurred. On Wednesday, job vacancies in Australia, but Eurozone consumer confidence, industrial and services all come out, pretty important there. MBA mortgage applications in the States, and a little bit more Fed doing a little bit more talking. As you noticed, the Fed officers have been out there a lot more than we've seen in previous times, and I think there's a lot more communication going there between the Fed and the general populace, which is good, because that sort of tends to lead the way we feel in terms of our investments. In Australia on Thursday, we've got building approvals, private sector credit, retail sales, all very important. The construction, housing starts in Japan, and in the States we've got jobless, continuing jobless, CPM, factory orders, pretty good, and that'll lead into the big numbers on Friday night and 1st of April, oh dear, but Friday night, where we've got changing non-farm payrolls. Pretty pricey number there, which we're looking for an increase of 190,000. It's quite a large number, but anyway, the market's looking for it. You've got private sector payrolls up, manufacturing. I'd like to see that number pick up as well. Unemployment rate is expected to be down 8.9%, and average weekly earnings are expected to be up just a little bit. We've also got construction spending and the Institute of Supply Managers on Manufacturing Index, which I think will be looked after and widely. Well, just a bit more of an idea as to how we're going with inflation. Domestic vehicle sales and total vehicle sales as well on Friday. So that's pretty much the war report. I guess in terms of trends, what are we looking at? Dollar yen, we're still there. Still got a position, still got a small position in grains. We have tailored back these positions. Natural gas, we put out a report, the video report, so stay tuned to that one, have a look at that one. We've also got that in hard paper as well if you didn't pick it up. And if you do, just send us an email and we can ship it through to you. There's a couple of leverage plays on natural gas which we're liking, and some non-leveraged ones, so there's a good appetite, and I think as we've mentioned in these reports, it is on a low. So I think with the things we've seen in Japan, the reflections around the world on the use of nuclear, I think, are going to be quite important there, because we might get a change in trend towards these infrastructures. It's madness in Australia because we have natural gas already piped around Australia. Why we're not into that, I don't know yet. But anyway, should see an uptick there, and let's see what happens. That's about it from me for the Week Ahead report. Have a good week, and we'll talk to you soon. Bye for now.